Hello, everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and with me today is Dan Darrow. Dan works alongside our guest last week, Scott Redler, in the Alpha Team virtual trading floor with T3 Live every day, and he is an options specialist. So we're going to have our conversation today kind of focus on options. Thanks, Dan, for doing this with me today.
Thanks for having me back. It's great to be
Yeah.
here.
Yeah. Okay, so let's start off with my first question for everyone who comes on. And that's how would you grade your week of trading so far on your typical school grading scale in A to an F, and why?
I would say it's a solid B,
Okay.
which I mean, if you've heard me, I'm usually around like a B.
Hmm.
It's more common for me to be like an A. It would have to be like spectacular, or I mean worse than that. But I feel like I mean this week has been a little bit tougher just after the way last week played out.
Hmm.
So I felt like coming into the week I was a little bit more wait and see. So
Mm.
I'd say B because on one hand, I feel like I capitalized cautiously, but it also was maybe a little bit too cautious in that I missed some opportunities. So some good things, some bad things. I'd say overall though, about like a solid B.
Okay, great. Just so for everyone who's here with us, I did just put a comment in the live chat just so you guys can see where that is to submit your questions for Dan. So in the first half here, him and I will have our own conversation, but we definitely want to be answering questions from the audience. So as those come up, go ahead and submit them, and I'll be sure to ask him all of those in the second part of this event. Okay, Dan, so looking back on the week, we're about halfway through, or a little over halfway through, end of Wednesday. Tell me about the best trade you've had this week and what made it go well.
Yeah. So it's actually something we can touch on a little bit later, and we'll go through some charts. But
Mm-hmm.
one of the things I do with my strategy is I focus on a lot of earnings plays,
Mm-hmm.
or just event plays in general. And this week we're still in the middle of earnings season, so it's been kind of busy in that regard. But one of the good things I did was I played not Datadog specifically, the options on it. I played what's called the sympathy play on two of its peers, which were MongoDB and Snowflake.
Mm-hmm. Mm-hmm.
So those actually both actually worked out pretty well for a trade, and this is something we can get to a little bit later, and I'll go over the
Mm-hmm.
charts, just like talking through like the rationale behind that.
Yeah.
But that was this week so far. Like that was definitely the highlight of the week for me.
Okay. And then on the flip side of that, what would you say has been your worst trade and
Yeah,
what made it go
yeah.
wrong?
I mean, there's a few that didn't go so well, but I mean,
Uh-huh.
one of the ones that's been a thorn in my side, just over the last week or so has been a carry put spread position,
Mm-hmm.
which I it's a name I've been involved with for a little while, but last
Mm-hmm.
week when so many things ripped higher, it was a position I decided to give a little bit more room than maybe I should have, and
Mm-hmm.
so both last week and then at the beginning of this week ended up costing me a little bit of money. But right now I'm at the point where I say, okay, it's started to pull back. Maybe I can hold on to it for a little bit longer and see how it goes. But that was one of my poor decisions the last couple of days. Was
Mm-hmm.
holding on to that when I knew that I probably should have gotten out earlier.
Mm. All right. So when something like that happens, when you kind of maybe break your own rule of
Mm.
how long you should stay in a trade, how much room you should give something, what do you take from that to move forward to not maybe repeat that mistake in the future?
Yeah, I mean, I think that's one of like the hard things about trading is just admitting that a position or a trade just it's not working, right? You were
Hmm.
wrong. Your
Right.
thesis for the trade just isn't working out. Um, and for me, I mean, to be honest, like the reason why I didn't cover it is because I thought where the options were trading at the time, like it was worth more for me to let the options go to zero than it was to like recover like the small amount of premium. So
Mm-hmm.
it was really more of like it was more of like a risk reward game in that sense. So I mean, generally, like I really do try to like hit my exits when the trade changes or when my risk parameters are hit. But in this case, like it kind of falls into the category of saying, okay, the options lost 90% of their value. Do I want to risk the next 10%, see if maybe it comes back, or do I want to just take the 10% and move on and go to something else? So, um, I think each setup is a little bit different. So, I mean, I don't like to do this for all my positions because obviously, covering a stock or an option at like a 40% hit or a 50% hit is much better than letting the option go to zero. So generally I try to
Hmm.
like take those positions off before, but in this case I thought, okay, it's already down 90%. One of I give the other 10% because my options go through December and then see if maybe it comes back, just because there was such like a sharp, fast, like kind of like vicious style squeeze where I thought maybe it was a little bit exaggerated and it could reverse a bit.
Hmm. Do you think because your strategy focuses mostly on options versus trading like straight equities, it gives you a little bit more room for that type of risk in your
Yeah.
positions?
Yeah. I mean, I think one of the things about options, I mean, this is like debit based options, is that you always know what your risk is, right? So it's the
Hmm.
premium paid for the contract. So in that sense, I mean, I think one of the hard things about trading is always like quantifying your risk, what you're risking in the trade, and what your potential reward is. And then
Hmm.
for options, at least, okay, yeah, you don't know what your potential reward is going to be, but at least you know what your risk is.
Hmm.
So I I I'm of the opinion that not every option you get into has to go to zero. I mean, some people prefer to use options more of like, they're trying to hit a home run. It's either all or nothing. Because I'm more active with options. That's just generally not how I do it. It's usually,
Right.
I trade them like I trade anything else. Like when the setup is no longer there and it's not working, it doesn't look good. I get out, take the money and move on to something else. So, but I really do like, the fact that, okay, in this case, yeah, the trade didn't work. I let it go further than I want, but at the end of the day, I know at the, worst case scenario, like the max amount of money I'm losing is what I put into the position, right? Versus like if
Hmm.
I was actually short the stock, it could just keep going up and up and up, indefinitely, and I would keep
Right.
losing money indefinitely.
Yeah, totally. Okay, so you mentioned this kind of briefly, but it has been a much quieter week of economic data.
Mhm.
Uh, Apologies for my dogs. I don't know what they're barking at.
That's
Um,
okay.
so it's been a much quieter week of economic data. Last week we had uh, the Fed decision, Apple's earnings, the jobs report, like tons happening. Earnings are still going on, but it has been a little bit quieter. But focus does remain on the Fed. Fed chair spoke this morning. He's set to speak at the IMF conference, on an IMF panel tomorrow. So he's still kind of in focus. How
Mm.
would you describe the current sentiment, market sentiment, and action after last week's huge move higher?
Confused is that one way to describe it?
Mm.
No, I think I think it's a very interesting. The last 2 weeks in general have been very interesting, and
Mm-hmm.
the next 2 weeks after this, I think are really going to be just absolutely like pivotal for like the final couple months of the year.
Mm-hmm.
And I think there's a lot of mixed sentiment. So I mean, you got people that are still very like dug their heels and bearish, that still
Mm-hmm.
are convinced that a soft landing is not possible. That if we do start to see deteriorating economic readings, that it's not a sign that the Fed is doing their job. It's a sign that the economy is really starting to head south quickly.
Mm-hmm.
Um, and or on the other hand, but you got people say like, soft readings means the Fed could take their foot off the gas pedal. Interest rates are done going up. Maybe that like softens some of the pressures on in certain areas, right? Also, it always seems like there's always a green light to buy tech, right?
Mm.
It's like, the regional banks are collapsing, buy tech, right?
Mm-hmm.
Like interest rates are done going up, buy tech. So it's kind of funny how like the Magnificent Seven always seem to have some sort of bull thesis. But I think people, I think right now after like this last, actually, did we finish green today? I don't know if we finished green
Yeah,
today or not.
we did the S&P 500.
Did we?
It was like right above, what was
Yeah.
it, 0.1%. So four
Okay.
points.
So
Yeah.
so
So we
the streak
technically
continues. Yeah, the streak
eight-day
continues.
streak. Yeah.
Yeah. So which I guess apparently is like the longest in several years.
Since 2021. Yeah.
Yeah. So
Mm-hmm.
I mean I think after this move, people are just, there's people that may have missed it. or there's people that have been short it.
Mm-hmm.
And I think people are just like looking for some sort of confirmation that, was this just like a really sharp counter trend move when we're still moving lower, or is this the beginning of something bigger? Because people have been talking about, seasonality, end of the year,
Yeah.
typically we get some buying. People have been calling for year-end rallies, right? So
Mm-hmm.
and the reason why I say the next 2 weeks is because next week you have the November CPI,
Mm-hmm.
and you have pretty big earnings slate of retail earnings next week, and then
Yeah.
the following week is the last of the Magnificent Seven, which is Nvidia, which is also
Yeah.
arguably probably the most important stock in the market right now.
I would
So I
agree. Yeah.
think by the end of next 2 weeks, we should have a pretty good idea of whether this is something bigger, or is this just like another, bear market bounce, whatever people are calling it.
Hmm. Zooming out on Q3 earnings season as a whole so far, you mentioned we have those big ones still to come up. But what are your thoughts on the reports we've gotten so far and the market reaction to those reports?
Yeah. I mean, I think so, kind of like taking it back as like a whole. I mean, I think that the numbers have been okay.
Mm-hmm.
The numbers from the names that matter the most have probably been slightly better.
Mm-hmm.
Um, I think, I think like a 9 day or 8 or 9 day rally makes a lot of things look better than they did, like,
Mm.
8 or 9 days ago. Because
Yeah.
if you'd asked, if we'd gotten together 2 Wednesdays ago, right
Mm-hmm.
after Google reported, we'd probably be having a different conversation. So I think right now, like, sentiment is better. I mean, people are more willing to like look through, maybe like softer guidance or lackluster guidance, because when momentum's firing and people are looking to like put money to work on dips. So I think I think as a whole, earnings season was okay. I mean, on like the big names, like the Magnificent Seven, you've had 6 reports. Tesla wasn't very good. Apple was
Mm-mm.
lackluster, and Google was
Mm-hmm.
disappointing. So you had three that were not great. You had three that were a little bit better. So like Meta was solid, Amazon was
Mm-hmm.
solid, Microsoft. So I feel like that's kind of like the story of the market. It's like, some names have been okay, some names have been a little bit better, but as a whole, it seems like, the names that matter the most have been all right, and the stocks have performed okay. And I think right now, I mean, it seems like a lot of stocks are just going along for the ride. So, as the market moves, as rates move, as the dollar moves, it seems like a lot of these names are more sensitive to those like overall market-wide developments. I
Yeah.
mean, earnings are important, but it does seem like, those are really like impacting a lot of names broadly.
Yeah, totally. Um, I assume since you are an options trader, you obviously trade most actively probably during earnings season. Would that be correct?
Hmm.
So
Yeah.
describe just or detail kind of what is your overall earning strategy when it comes to earnings season.
Yeah. Yeah. So, here, I'm gonna share my screen and like
Okay.
talk through some things.
Yeah, definitely.
Um, so when, so when it comes to when it comes to earnings, a lot of times, let's make sure I got this. So should be able to see it now, right?
Yep, I can see the
Okay.
dad dog.
So yeah, yeah. So when it comes to earnings, a lot of times, I feel like people focus they focus exclusively on direction, like trying to get the direction right.
Mm-hmm.
Um, Whereas for me, a lot of earnings revolves around what's priced in, like option wise,
Hmm.
because I'm more looking for like the setups that the options appear mispriced, meaning like, the options are saying, so for instance, for like Datadog, the options were saying like the stock was expected to move $10 this week. At one point yesterday morning alone, it was up 25. So
Mm-hmm.
the options were priced in 10, stock moved 25. I mean, that's orders of magnitude more than what the options were anticipating. So, you know, if you had bought calls, great, you would have made money. If you bought puts, you would have been upset because the stock ripped $25. But I mean, for me, it's more about like focusing on the names I think could move, and then looking at like either like a straddle or a strangle, because it's not picking the direction, it's just picking like the right setup that's going to move more than what the options are pricing in. Um,
Mm-hmm.
and I mean, like 90% of 90% of like my options trades around earnings are either like straddles or strangles. Like I just I'd much rather be in a setup that I'm more confident is going to move than try to like pick a direction, because I don't know, to me, a lot of times like earnings plays are notoriously hard to predict in terms, I mean, you could think some company's going to crush it, and then they do, and then the stock sells off, right? And it
Mm-hmm.
seems like it should have been a slam dunk on the long side, and then all of a sudden it drops. So I just rather like focus on the setups where I feel like options are mispriced, and if I play it both ways, hopefully it moves enough one of those directions to make up for the options I lose on the other side, right? So in this
Mm-hmm.
case, like long story short, in this case, like Datadog, I wasn't as confident that it was going to move in greater than 10 points, but what I ended up doing was looking at closely correlated peers. So what I call sympathy plays,
Mm-hmm.
which would be on MongoDB, and then the other chart is Snowflake. So both of these stocks, and it's been for several quarters now. Like these three names have really started to like trade with one another. I mean, you
Mm-hmm.
can see like through like those charts, like these charts I just flipped through. I mean, like over like the last 6, 7, 8 months, I mean, the stocks have performed different, but around earnings, you tend to get reactions to one another's earnings releases. So um, this quarter, as it played out, Datadog was the first of the three, and there happened to be like kind of like a weak print in like a similar peer last week that knocked them lower a little bit. So it was just kind of an interesting setup, and I felt like with Datadog pricing in a big move coming off a quarter where it had a very large drop, it
Mm-hmm.
just felt like even though I wasn't necessarily as confident that Datadog was going to exceed the priced in amount, I thought that the options on those two peers, MongoDB and Snowflake, were a bit were priced a bit low, and could really present some opportunities. So um, again, I mean, like a lot of earnings season for me, it's not about the direction. I mean, yeah, if you can get the direction right, that's great. But I do find that oftentimes what works better is when I can focus on the setups where it just seems like the option pricing is low, or if the option pricing maybe is expensive, then but it's still looking for the setup that can exceed what's priced in by the market.
Hmm. So, when it comes to options trades, what are your favorite setups to look for?
Yeah. Okay. So this is what I call the sympathy play.
Mm-hmm.
And I mean, in this case, it was like these three names, but you'll see this as kind of like a recurring setup throughout earnings season, right?
Mm-hmm.
And as you go through the quarter, you'll find this playing out over and over and over again. So just to like, you know, off the top of my head, right? Like when like the banks report, usually have like three banks report on the first day. It's usually like Citi, JP Morgan, and Wells Fargo, right?
Mm-hmm.
Well, obviously Bank of America, Goldman Sachs, Morgan Stanley, like they're typically pretty sensitive to those earnings. So you could look at like B of A as a sympathy play off of JP Morgan, because like odds are if JP Morgan's particularly good or particularly bad, it's probably going to move Bank of America, right?
Mm-hmm.
Um, Also, like with the airlines, like Delta typically reports first.
Mm-hmm.
You look at Delta, and I mean, usually it's the first in the quarter, and then like the following couple of weeks you'll have AAL and UAL. And the nice thing about these sympathy plays is that if the options line up right, you'll have like a stock like Delta, which reports one week, and then American Airlines reports the following week. So the prices of the options on American Airlines will be, relatively speaking, a lot lower than what they're on Delta, because Delta has the earnings catalyst. American
Right.
Airlines doesn't have the earnings catalyst. But if Delta has a big move, odds are American Airlines will also have a big move. So like these types of things play out a lot. I mean, it's not just on these ones that seem really obvious. Sometimes there's
And
other names
Snap,
that,
Snap and Meta
yeah,
always seem to be
Snap,
really
yeah,
related.
yeah,
Mm-hmm.
exactly. Snap, and Meta. One of the interesting things lately is that Microsoft tends to report first, and Amazon Amazon is extremely sensitive to um, Microsoft earnings lately, because when
Hmm.
Microsoft talks about Azure, it
Yeah.
is, yeah. So in this case, so Microsoft had a pretty big pop, and then they were talking about the Azure numbers, and actually led to Amazon getting hit very sharply. So I mean, it might not seem intuitive at first, but in this case,
Hmm.
Amazon and Microsoft are very sensitive to one another's like cloud numbers. So like these are the types of things where, it's you know, you might not get a massive move, but at the same time, like these sympathy plays, oftentimes the options are priced quite a bit lower than the names that are actually reporting. So you don't need to get like the same percentage move because the options aren't pricing in the same amount. So it, again, I mean, it kind of
Hmm.
comes down to that idea of like finding these setups where, it's not about picking the direction necessarily. It's about picking like the options that could leave some potential there. So that's definitely one of the things I look for during earnings season, often. Um, I mean, outside of actually playing options on earnings, there's a setup that I really love called the 8 EMA catch up.
Hmm.
So people on the VTF probably, they're probably sick of hearing me talk about this all the time, but um, I mean, because like let's be real. I mean, you know, there's so many companies reporting, so many big moves. I mean, some of them you might be lucky enough to be involved with, but there's probably quite a bit more that you just won't be involved with, right?
Right.
So what I like to do is just make notes of like the stocks that have had big gaps on earnings. So gaps higher, gaps lower. And what I do
Hmm.
is like I track those names like on the few days following earnings. And what I love to look for is what's called the 8 EMA catch-up play. And it's this green line here is the eight. This is the 8 exponential moving average. So what I do is I wait for the 8 exponential to catch up. So in this case, it's on the upside. I mean, the same idea would apply to a stock that gaps lower on the downside.
Right.
Um, but what I find is that typically, when the 8 EMA catches up on these earnings gaps, it tends to set the floor. And then what that does, it helps the stock, form a higher base, and then it provides a little upward pressure, which can set up like that turn and next leg up. So
Hmm.
even in this case, even if you missed like the Netflix gap on earnings, if you had waited for like the 8 EMA to catch up, you can see that it set the floor really nicely. And then
Hmm.
it actually ended up leading to the stock turning higher, and you got like that sharp extension to the upside again. And so, these are setups like post earnings, like they're not on the actual report. But I do think like, people that are active, like there's a lot of opportunities even after the fact,
Hmm.
because like when these stocks have these big gaps, oftentimes you'll see follow through, um, which, in this case, like you don't need to take the earnings risk. I mean, like this is after the earnings played out. And what's even better about these setups too is that a lot of times the option pricing is normalized. So,
Right.
after the big catalyst, the option pricing tends to drop a bit, just because that catalyst is out of the way. So sometimes you can get great moves with the option pricing a lot more modest. On the flip side of this, on the flip side of that is that sometimes stocks just gap and go, right? So in this case, like Amazon, it had a great quarter, gapped up, but I mean whereas like Netflix kind of paused and consolidated and digested a little bit, allowed that 8 EMA to catch up. Amazon has just been humming along, up, up, up,
Hmm.
up. So in this case, but when you wait for that 8 EMA setup, sometimes it lines up really nicely, but there's also other times, like Amazon, where it's just a gap and go and it doesn't really give you the opportunity. So in these scenarios, like oftentimes, like I'll miss it if it just keeps extending. But like that's something that I've learned. It's like I have to be comfortable letting it go,
Hmm.
because what I find is like that 8 EMA setup, it's it has like a really good track record. So I prefer to like wait for like the pattern to form, and if it doesn't, then I just let it go, or wait for something different.
Hmm. So these two, the sympathy play and the 80 may
Yeah,
catch up, are two setups you like to use during earnings season
yeah,
specifically.
yeah.
But what other options setups do you like to look for, outside of earnings season or unrelated to earnings?
Yeah. Oh, yeah. So there's, I mean, there's a couple other things too. Um, so this is more of like something to like, I guess I personally avoid when it comes to earnings. it's
Okay.
stocks that have had really, really sharp moves right into earnings.
Yeah.
So whether that's on the upside or the downside. So in this case, I actually coming into the quarter, I thought Uber was kind of an interesting name. I'd been keeping an eye on it. It was as it was like treading water in the mid 40s, and you know, part of what I was looking at was this weekly chart. So this is
Mm-hmm.
going out of ways, but it's a name that's really turned the corner nicely, and it felt like it was like a setup where if they could deliver, because last quarter wasn't bad, the stock sold off, but the last quarter wasn't bad. So I felt like if it could deliver, it could really bust through 48, 49 and turn the corner because this is like a big multi-year resistance level.
Mm-hmm.
But the problem is Uber had a very dramatic run into earnings. So I mean, a lot of names did. So it wasn't just Uber. I mean, a lot of stocks had sharp runs over the last 2 weeks or a week and a half.
Mm-hmm.
But what I don't like is like a setup like that where a stock is 4, 5, 6 days up in a row, or likewise on the downside, just because it gets it puts it in a very difficult spot to kind of get a feel for where expectations are. Um, I mean, in this case, it did end up trading a little bit higher, but generally, like these are the names like I would avoid. So I didn't play Uber earnings because of this. I mean, there was a name that I had marked down on my radar coming into the quarter, but I decided to leave it alone just
Mm-hmm.
because of that fact. So, like that's one of the things where I've talked to people that they ask, oh, the stock is exploding into earnings. Why don't you want to play it? It's because a stock that's straight up every single day going into earnings. I mean, it, you know, it, not all of them are sell the news, but I mean, you really open yourself up to like being involved in like a setup where it's sell the news. I mean,
Mm-hmm.
at some point you have to expect like people are anticipating like a fantastic report when the stock is going up 4, 5, 6 days in a row right into the print. So in this case, like I didn't play it. I didn't play it into earnings, but this was like something where I feel like, sometimes like not taking a setup can actually be more beneficial, right?
Mm-hmm.
And then for like Uber, or if it was like something that drops straight down, I mean, like those would be more like avoid scenarios for me when it
Mm.
comes to earnings.
Okay. Any other setups you want to go through before we move on?
Yeah, I mean, another one that's I guess it's been a little bit more recent lately is that you've seen a lot of stocks that have been in like these really really aggressive downtrends
Mm-hmm.
going into earnings. So I mean, this Dexcom I'm sure is not a household name. It's a med tech company. They're a diabetes monitoring, and they they they're one of the victims, or I mean, stock wise, they're one of the victims of the weight loss drugs,
Mm-hmm.
Ozempic, Mounjaro, et cetera. Um, but what's interesting about this, and kind of how it relates to earnings, is that um, typically when a stock is in a really well-defined trend, I
Mm-hmm.
find that volatility can tend to be more muted when it comes to earnings, um,
Hmm.
meaning that you know, like these were not these were not generally be setups where I'd be looking for like a massive move. So stocks that are in like these really steady trends. So whether that's a steady trend lower in this case or steady trend higher on something else,
Mm-hmm.
I just find that trending names often have more muted volatility. But like in a setup like this, and we talked through this on the VTF, like and a lot of similar setups on different names reporting is what's really important. It's not necessarily like the first move on earnings. So if you were in it and it popped on earnings and you had calls, that's great. But what's really important and like the follow up is holding like the top of the trend, right? So in this case, it popped through the trend, it pulled back, and then when it solidified its base above the 20 days. So the 20 days is pink line, which is the top of the trend. That's really where you saw it turn and it started to like open up and get that extended move. So these types of names, the ones that are trending, a lot of times I'll avoid those two for earnings. But what I look for like right after earnings is whether the announcement delivered like a break of the trend, and if so, does it give like a quick setup where okay, you get like the initial knee jerk reaction up, you get the quick back test, right? And then if it holds above the trend, then a lot of times you can see like a more extended move. So this would be like the same case in a stock that was hypothetically trending higher. they slipped up, got hit quickly, then you get like the fast bounce back test and it couldn't get back into the trend, and then you look for like the short. So these are like this type of setup is like, quick, like day after, a couple days after, where I'm looking for a confirmation of the break of the trend, and then some sort of like fast extension, in this case to the upside.
Okay, so go through some current setups that you're looking at for trades that you might want to take yourself
Yeah,
in the
yeah,
days and weeks to come.
sure. Yeah. So speaking of like the weight loss drugs, so
Hmm.
like a lot of these, like these are things on my radar, and a lot of these names will, if I do play them, they're going to be options. So I'm just going to
Hmm.
put that out there.
Just
Also,
for some reference for the audience, uh, you do have a lot of focus in the biotech sector in your
mm,
personal
yeah,
trading, right? Yeah.
exactly. Yep.
Hmm.
Yeah. So like, some of these, so this Pfizer one, for example. So this kind of revolves around data, which obviously, I mean, events like earnings in general are very unpredictable, and I feel like biotech even more so. I mean, there's
Hmm.
typically a lot of volatility. I mean, Pfizer, it's a little bit different, it's a big pharma, but this one is actually on my radar for data. What's interesting is, I mean, other than the stock being absolutely crushed this year,
Hmm.
is that they're gonna have mid-stage weight loss data. So, going back
Hmm.
to Ozempic, right? Eli Lilly, Novo Nordisk, right? Those stocks have been some of the best this year because of those weight loss drugs. So,
Hmm.
Pfizer, just on their earnings call last week or the week before, they said that they're going to have mid-stage data on their weight loss drug before year end. So, this stock has been beaten down. Expectations are very, very, very low, and it
Hmm.
seems like if they have anything positive to say, it could be a really nice catalyst on this name, especially with the stock. The stock is now lower than where it was. I don't want to scroll out, but it's basically lower than where it was pre-COVID. So,
Hmm.
this is a stock where sometimes like everybody hates it, then all of a sudden it gets like a little bit of good news, and right, like you get a little bit of good news, and all of a sudden it's like straight up for a few days. So this is one where I'm kind of like looking, it'd probably be like some point late November, December, some sort of option position where maybe capture data, and if the data is good, maybe see like a nice little bounce in this beaten down one.
Okay. Hmm.
Another one that, I mean, it just popped on the radar, and actually, I have to see where it's trading, because like after the close, it looked like it was above 18. But BITO is been in a pretty tight 2-week bull flag right at the year-to-date high, which
Hmm.
BITO doesn't correlate perfectly to the action in Bitcoin. So I
Hmm.
believe Bitcoin's at a new year-to-date high and BITO is not. But this is a really, really nice clean bull flag right at year-to-date resistance. And you can see if it does get up through 18 decisively, it appears as though there's like a path up to 20. So, BITO on its own looks like a nice setup, but then obviously there's a whole host of other names that move along with this, right? So, like
Hmm.
like Coinbase, the crypto miners like Mara, Riot, MSTR, etc. So, BITO looks like a pretty nice pattern. And what you also notice is, so I was just talking about the 8 EMA catch-up trade, but you can see that after a
Yeah.
pretty big rip and run. I mean, now you got the 8 EMA catching up and starting to like set the floor and provide a little upward pressure on it there.
Hmm.
Yeah.
Okay.
Yeah. Let me know if I'm going too
No, no, no.
fast.
You're good. You're good.
I'm all worked up over here. So next week, two big things on the watch list are two big retail reports. You have Target.
Uh-huh.
Target's next week, and then Walmart is also next week. So this is the
Hmm.
chart of Target, and then this is the chart of Walmart. I mean, basically the complete opposite
Opposite.
of one
Yeah.
another. Yeah. So, and I mean, I think it's justified. Target's business is still, they're still struggling to find some momentum, whereas Walmart's been humming along, just delivering. So, but I
Well, and
guess
with
what's
I think
interesting,
with the
yeah,
changing consumer picture, Walmart
yeah,
is winning definitely
yeah,
when it
yeah,
comes to the
yeah,
consumer.
yeah, yeah, and I mean, one of the things that I believe like Target was like talking about is how like some of like their higher discretionary items were a little bit softer, whereas like
Hmm.
Walmart focuses more I think it's on like I think grocery is like a much bigger portion of their business.
Yes.
Um, so I, like the companies are obviously different, but I mean they're two massive like um, retail players, and I mean especially like Walmart. I mean people are gonna like look at like the online sales, right? And
Mm-hmm.
it just has implications across like a lot of other names. But I guess what I'll be watching is Target, because I mean it's at so it's at multi-year low. Stock has
Mm-hmm.
been falling apart, and I feel like people are just they just don't want to be involved with it. And even though that makes for like a miserable chart pattern, it could actually make for a better setup going into earnings, because the expectations I mean, down here they seem pretty low. I'd have to like double check and see what the options are pricing in. Um, but I mean, this does seem like a setup where it wouldn't take a whole lot of good news to maybe see like a nice little oversold bounce on this one.
Mm-hmm.
Because I mean, it's still Target, and I feel like Target still like resonates with a lot of people. They've
They still
they've
get a
hit a
lot
bit
of
of like
my
a
money.
rush. Yeah, I know. Yeah, me too. Well, my wife, yeah.
Yeah.
But yeah, I mean, I don't know. This is one that's interesting to me. I mean, I think Target from like a trade standpoint is more interesting than Walmart, but obviously both of
Mm-hmm.
those names are gonna have. I mean, they're going to be talked about a ton, because like they're two of the biggest high-profile names reported next week.
Mm-hmm.
Also next week, the 14th. So this is the November CPI. It'll
Yes.
be for the month of October, but I mean, it's in November. So this is the
Mm-hmm.
CPI reading, and this is the chart of the Qs. I have no idea where we're going to be on Tuesday.
Mm-hmm.
Sorry, did I say I didn't mean Wednesday. This is on Tuesday next week.
Yeah.
So I have no idea where we're going to be at that point. But if we're anywhere around here, I mean, you can see that it's a pretty interesting spot. We're right
Mm-hmm.
at like I can draw it. Oops, might be able to draw it. Right, right above the top. Oh, look at that. Quick little trend line there. So we're right above the top of this trend line, this downtrend that began in July.
Right.
And if we're anywhere in this vicinity going into that CPI, it really seems like it's going to be like, quite a bit of like a make or break CPI reading, where,
Mm-hmm.
if people are disappointed and we break back below, could start a more extended slide. What you'll notice is that we have had some really sharp bounces. So after we topped in July, we've had some pretty sharp bounces over a short stretch. And when we've rolled over, it has, I mean, I mean, some cases it was only like 2 or 3%. But then there's been other cases where we've had like pretty quick like 5% pullback. So I
Mm-hmm.
mean, just in October it was like an instant to that. So I think the CPI and where we're sitting on the Qs next Tuesday is gonna be really really fascinating. And I mean, I'm not sure what the option pricing will be that day, but I do think like this is a setup, because we've had a couple, I think like more modest reactions to the CPI lately.
Mm-hmm.
But I think where we're at right now, and how like people are still kind of uncertain what comes next in terms of Fed policy. I think this is going to be a little bit bigger one.
Yeah, I would definitely
Uh,
agree.
yeah, and then one last one. This one's 2 weeks out, but the last of the Magnificent Seven.
Mm-hmm.
So this is on the 21st, so it's 2 weeks from yesterday. And I mean, again, it's the last of the big seven, but also, I mean, at this point, it still feels like Nvidia is the most important stock in the
Definitely.
market.
Mm-hmm.
Yeah, I mean, AI has lost a little bit of its luster after this stretch in the summer, but I mean, Nvidia still seems like the kingpin here, where it's not the biggest market cap, but it is. I think right now it's probably like the biggest driver of sentiment when in terms of like tech. I mean,
Mm-hmm.
even like Microsoft, which is nearly back at its 52-week high. I mean, it seems like a lot of these names are still being driven by like AI enthusiasm. So, along those lines, NVIDIA is going to be a massive report.
Well,
And
and
it's,
Nvidia seems to be, it's kind of like this unique story of, did they set the bar too high for themselves? Which
mhm,
was the question for everyone ahead of the last earnings report after that huge, guidance, and then they just blew that guidance out of the water, and so now we have even higher guidance, and
mhm.
so it's just
Yeah. Yeah. I mean, it's
Objectively, it's just an
definitely,
interesting earnings report to watch.
absolutely. I mean, it's a very interesting dance, right? Because they want to show, they don't want to like underwhelm when it comes to reporting, but they also don't want to
Mhm,
set the bar, too unreasonably high where, I mean, then all of a sudden expectations are just unattainable. So
mhm,
plus, I mean, to be honest, I mean, they might not have a lot of visibility out that far. I mean, when there's such like a mad rush to just hoard chips and like
mhm,
stockpiled chips, like, I mean, they don't really know. I mean, like that demand might all be like front loaded, and then some point next year when everybody gets what they need, it could just like fall off a cliff. So
mhm,
I think, I mean, it's interesting for many reasons. And I mean, 2 weeks from yesterday, you'll have this report. So
mhm,
I think it's, I think there's going to be a lot of moving pieces. I mean, both in tech, but also, I mean, Nvidia's reactions could really set the tone for like the indices for the next week or two after that.
mhm. And before we go to audience questions here toward the end, you mentioned that you like to use straddles and strangles around
Mhm.
earnings. So just explain, what is a straddle, what is a strangle, versus just taking a straight like long calls, long puts, etc.
Yeah. So a straddle or a strangle are the similar idea. It's just slightly different design for options. So just going back to Datadog as an example, so the options were priced in at about $10, give or take, for the week.
Hmm.
And the straddle at the time, so the stock, let's just say hypothetically, the stock closed around 80, which I think it did. But the straddle would be the at the money 80 call and the at the money 80 put that expired
Hmm.
this week. So
Hmm.
that's what the straddle would be. So the options were priced in 10, so you can do the math. If 80 was at the money, that means like the call cost 5 and the put cost 5. So
Hmm.
basically, what you're doing is like you're hoping that the stock moves enough where, okay, my put's going to be 0, but if my call's worth more than 10, then I'm coming out ahead, right? Because I,
Right.
I paid 10 for both contracts, and if I can sell the call for the next day for more than 10, then I'm the strategy is going to be a winner. Um, a strangle, it's the same idea. You just set it up a little bit different. So straddle it would be like the at the money 80 call and at the money 80 put. A strangle could be any contract higher on the call side. So it could be like the 84 call and then the 76 put, or it could be the 80 85 call and the 75 put. I mean, a strangle just means like you're buying a call and you're buying a put. They're just not at the money, because at the money is what's a straddle.
Hmm.
So typically strangle is just a less of a dollar commitment. Contracts further out of the money or out of the money are going to be lower priced than contracts right at the money. So
Right.
straddle tends to be a more upfront, cost wise or debit wise, whereas strangles are typically a little bit lower. Strangles, you tend to need a bigger move, whereas straddles gives you, they give you a little bit more insurance.
Right.
If the stock doesn't have a huge move, then options closer to the money are going to have a bit more value left. Whereas, if you buy contracts further out of the money, and the stock only has a small move, then those contracts are going to get hit. They're going to get hit a lot harder.
Hmm. Okay. Great. Great. This has been really great. Okay, go ahead and unshare your screen or stop sharing your screen, and we can go to these audience questions. Okay, great. So our first question comes from Logan. He asked, when trading off technical analysis, if you do, are there go-to signals that are consistently profitable for you, or are you more open-minded when scanning for signals?
Yeah, yeah. So definitely, yeah. I mean, just I felt like we spent a good portion of this chat here, just like going through some technical signals. But um,
Mm-hmm.
yeah, I love like trading off of technical signals. I mean, a lot of what I do is trading off technical signals. I mean, we spent a lot talking about earnings, and I realized like those are a little bit less technical. But I mean,
Mm-hmm.
outside of earnings season and like intraday or day to day, I mean, a lot of what I do is like set up based off like the chart pattern. So
Mm-hmm.
it's looking at breakouts, it's looking at breakdowns. But one of the things I do look at much more, it's much more prevalent. Let me put it this way: it's much more prevalent around earnings because you got big gaps. But one of the things I really love is that 8 EMA catch up pattern.
Mm-hmm.
So just to kind of like highlight that again, I mean, it is one of the things that I use a lot this time of the quarter, just because there's been a lot of gaps, there's been a lot of money moving around, there's been a lot of like fundamental developments, and I find that the 8 EMA catch up in this type of environment can provide a lot of opportunities, especially as a trader. If you're more risk averse and you don't want to play earnings, I mean, I get that. I mean, it makes sense to me, but it doesn't mean that there aren't opportunities still out there. So, what I like to do is just like jot down all those names with the big gaps, and then really wait for like those 8 EMA catch up trades to like develop, and then I obviously I don't go after all of them, but I mean, if it's like a nice setup on a good movie name, liquid options, and the pricing seems good, like I try to go after a bunch of them.
Mm-hmm. Kind of related to that question, Paul asked what percent of options that you execute are based off feelings and intuition opposed to facts and analytics.
That's a good question. I I don't know. I mean, I would say like a smaller portion is based off of feeling.
Mm-hmm.
Um, I I mean, I've been doing this for 17 years, so I mean, you know I I'm not I haven't been doing it as long as some, but I've been doing it longer than probably a lot of people that just recently started. So I mean, I do have some intuition, and like there are times where I have like a gut feeling and tells me to do something, but I would say at the end of the day, more often than not, like I'm getting into something because of a specific pattern, right? There's like a technical setup. So I don't
Mm-hmm.
know if that's like 20% of the time or less, but you know I would rather I'd rather have like a justifiable reason to be in something. So whether that's like a chart or a catalyst, or something that tells me like, okay, I want to risk money on this for a very specific reason, versus like, I do trust my gut, but I also don't, I also don't want my gut, or my emotions like dictating what I do to like a great extent, because there's been plenty of times where my gut's just been wrong. So I'd rather
Mm-hmm.
rely on chart signals, events, things that I know for a fact have worked, or maybe even if they don't work, at least I know that it's like a legitimate signal, versus like just trying to like trade off of like intuition or like a gut feeling.
Hmm. Jean Carlos asked, how long did it take you to become consistent? And what do you recommend for traders struggling with consistency?
Um, so I'll start with the second part of the question first.
Okay.
I mean, I think for a lot of people, consistency usually is something that comes through like kind of simplifying the process. So when people start out, um, they it's also like it's simplifying the process, but also like simplifying or like narrowing down like the people maybe that you follow,
Mm-hmm.
because like a lot of people throw their ideas out, and that's great. I mean, it's awesome to like listen to like advice from people who've been doing it a while, but at the same time, like the risk that some people take might not be the risk that you're able to take, or the style that they have might not line up with your style. So I think what could help is like find somebody that, or find some person that has like a similar styles, maybe a similar risk, and you can like kind of like either bounce ideas, or maybe like you listen to them more closely, and then
Mm-hmm.
just simplify it. So for some people, I know what works is just looking at like a handful of names, and they really just focus on those names. Um, for me, sometimes when it's like choppy or I'm going through like a rough stretch, I just focus on like just like a handful of setups, right? It's like
Mm-hmm.
it's not necessarily just a handful of stocks. It's like I'm just looking for like just like literally like two or three setups, like
Yeah.
something that just pops up, or a specific technical setup that if I don't get if it doesn't happen for a day or two, it's fine. I'll just wait around, right? So for me, it's like when I get in like that spell where like things aren't clicking, like I'm going through like a rough stretch. It's just simplifying it, like try to cut out the noise, look for look for the things that, are kind of like your sweet spot. And I mean, it's just really being patient, because I mean, sometimes things are firing and there's a lot of them happening, and sometimes there's not. And it's just really like narrowing down and just focusing on things that, have a higher chance of working. And then in terms of like my trading career, I mean, you know, I, I don't want to like discourage people and saying like, it started to click early for me, but
Hmm.
it did, but it was also a slightly different environment back then.
Yeah.
So when I started, it was 2006, which was tough. I mean, that first year was like a tough year, but then in 2007, then 2008, and 2009, I mean, like those were some really really extremely like volatile market years.
Hmm.
So I mean, I think for some people that start, I mean, it kind of depends on when you start and like the environment you start in, because
Hmm.
some markets are I don't want to say easier, but some markets, when it's more volatile, sometimes it's a little bit more easy to like
Well, you
make
think
money.
about
And
those
like,
who started in 2020 and 2021, and now they're
yeah,
trying to navigate
yeah,
2023. A
yeah,
very different market.
yeah, totally
Yeah.
different.
Hmm.
So I think I don't think you as like a trader need to hold yourself to a certain standard, because it's going to be a little bit different for everybody. And I mean,
Hmm.
I think a little luck plays into it, like exactly like when you begin, especially also like your style too. Like, people that focus on, I mean, people that only, again, I mean, like people that only focus on like the mega cap tech names, if they just started this year, they'd be like, oh, this is, I make money every single day. Well, I
Hmm.
mean, you're also in an environment where those stocks go up every single day, right? So there's a lot of variables. And I think what's important is that you look at yourself like making progress. Obviously, like the goal of this job is to make money, but you're also like, you can measure progress like other ways. Yeah, money is important, and money will come if you keep showing consistency. But it's,
Hmm.
you got to measure yourself based off of like the market, but also like how you as like a trader are growing. So, you know, sometimes like just minimizing the errors is growing, right? Like, yeah, like you might not, you might your profitable days might not be necessarily growing, but if you're, or like the size of the profitable days might not be growing, but if you're minimizing or lessening your down days, or lessening the hit on your down days, then that's still growing, right? I mean, that's
Hmm.
improving. So I think there's different variables, and I think it's really
Hmm.
important that you don't try to hold yourself to a specific standard
Scott
when
Redler
it comes
says a
to it.
lot. He focuses on like base hits versus home
Hmm.
runs,
Yeah,
and that's
absolutely.
a really important thing. If you're consistently hitting first base hit or hitting a double, versus hitting a home run here and then 6 down days in a
Yeah.
row, the consistent
I,
days of profit are going to be more
yeah,
beneficial.
I mean, think about it. Like the Major League Baseball is the longest season, right? And that's what,
Hmm.
160 some odd games.
Hmm.
Trading the stock market, so you have 5 days a week, four weeks a month, 12 months a year. I mean, maybe not double, but it's significantly longer than major leagues. And I mean, people in the major leagues, I mean, yeah, at the end of the season, you're talking about like people that hit 40, 50 home runs, but like what wins games day in day out? It's consistency. It's the singles, it's the doubles. It's about having like a strong batting average, like a good track record. I mean, like, yeah, you like to look back and say like, okay, there's some months or some quarters or whatever, some weeks that are just phenomenal, but it's the time in between that really is going to like, where you're like grinding your teeth and trying to like, make a little money here and there. I mean, like that's really where, I mean, I feel like this job that's what it revolves around.
Hmm. Okay, so we have a little less than 2 months left in the year, which is just crazy to think about. I feel like it was just January. Uh, what are your expectations for these final 2 months of 2023 in the stock market?
Yeah, I don't know. So, like, kind of going back to one of the things we discussed. I mean, I think these next 2 weeks will be pretty important in terms of sentiment, and also like, I guess, determining direction. Earnings, but also like the economic news with the CPI coming up.
Hmm.
After that, I mean, so it's going to be so after these next 2 weeks, we're going to be at Thanksgiving,
Hmm.
and then it's December, and then end of the year. So what's interesting is like we're we're actually already, I guess, depending on like what who wraps books when, but we're actually into tax loss selling season,
Yeah.
depending on who it is, right? So it's, I mean, we saw last year there was some brutal action into year end, and
Hmm.
I guess what I'm watching is, okay, so after these next 2 weeks, do we have direction in the overall market? If not, I mean, December, I mean, is there going to be enough on the calendar to really establish direction over that following month or the last month of the year? So I
Hmm.
think it's going to be pretty critical that like we come out of like these next 2 weeks with some sort of momentum, or at least this maintain the momentum we're on right now. Because if we don't, I just don't know if there's enough on the calendar to really like drive like a material upside into year end. Um,
There's a Fed decision,
yeah.
the last one.
Yeah. No, there is.
Yeah.
There is. But I mean, the Fed decision, and lately it has been determined by these
Yeah.
the economic reports. So it seems
Hmm.
like you have the CPI, and then what, the PPI, and like initial claims. So you have some things left, but I mean, it does seem like the CPI is going to be like the big one, or
Yeah,
the last big one.
this is the last.
Yeah.
I think this is the last CPI before the Fed. There's a Fed decision
Yeah.
December 13th. I think the CPI.
Yeah, so you'll have the jobs report too. So apparently, yeah.
Yeah.
So the December jobs report. So that'll be the other big one. But that, I mean, at that point, the expectations will definitely be set for what the Fed, or people expect the Fed to do.
Yeah.
So yeah. So basically, I feel like these next 2 weeks are really important. And then outside of that, it's like the names that have been performing poorly,
Hmm.
right? So if it's like a name, if it's like a high profile name, or a bigger name that's down year to date, and I mean, and we're through earnings season, or we're past earnings season, and that hasn't started to bounce, or even if it has started to bounce, I mean, what's going to be the catalyst, right? I mean, we saw just like the depths of which people sold names into like the drop last year in November and December. And I mean, there's a lot of names that are up this year, but there's also a lot of names that are down a lot this year. And I'm just, I'm looking at some of those names that are down, and I mean, by the end of November, if they haven't bounced, like those are names that I'm, probably going to be in like my sights for like bearish positions, or options, right? Because I mean, we might see like just like a really aggressive like tax loss selling, um, uh, because I mean, like, a lot of people hold the big names, right? A lot of people hold like the Magnificent Seven,
Hmm.
and if it's like a name that's down year to date, and people want to like book losses against like some of these big positions, I mean, like, some of those stocks could be like square in their sights.
Hmm.
So
All right.
that'll be something I'm watching until like December too.
Hmm. Okay, and then final question. Do you agree with the market that the Fed is done hiking rates? And if you do, which I think you probably do, um, when do you think cuts might happen in 2024? Just to have a prediction.
Um, I don't. So I do think the Fed is done,
Hmm.
but I don't know when the Fed will start. I think right now, what's the prevent? I think the Fed funds futures are what? It's June. Is June the first?
Yeah, I think it's
Yeah,
the summer
the
meeting.
June. I don't know. To me, it seems like the Fed starts cutting when things start breaking.
Hmm.
So I I don't think just like a gradual course of correction in like inflation readings, um, would lead the Fed to cut. So I think if the Fed were to cut, it would probably be because, something's going wrong.
Hmm.
Like it's more of like a easing. Um, but yeah, I don't know. I think 2024, the beginning of 2024 is gonna be very interesting.
Hmm.
There's a lot of people were totally off guard with how this year started, and there's a lot of things, a lot of hard things to predict when it comes to the economy lately.
Yeah.
You've had wars, and different like economic shocks, and um, I think the Fed is done raising, but I don't know when the cuts are going to be, and it might be interest rates might be higher for longer, or at
Hmm.
least longer than people are expecting. So if June is the prevailing sentiment right now, I mean, maybe it's going to be longer than that. So I guess if I need to put my marker down for anything, I'd say like the first rate cut is after June of next year,
Okay.
not before.
All right. All right. This was a great discussion. I definitely learned a lot about options and setups, and so I hope it was beneficial to the audience as well. Thank you, Dan, so much for doing this today, and good luck with the rest of your trading week.
Appreciate it. Thanks for having me back, and I hope you all have a great week.